Will we see a real estate crash in 2022? What's up with home prices, and are they ever going to go down, or is this just a fad? What's going to happen next? Hello and thank you for watching. My name is Wayne Trum, I'm a broker here in Metro New Orleans area. 25 years in the business, and this is my take on what's going to happen with the housing market, the crash, and the scam of real estate. Now, you would think the overall economy would fall just like stocks, bonds, commodities, and all of that. You would think that real estate would still follow suit, right? But it's not, and here's the reason why. Real estate is not a commodity that is bought and traded and sold within a day or two. It's owned by individuals just like you and me. Now, mind you, corporations own houses and investors own properties. I get all of that. But at the end of the day, the leading majority of homes are owned by individuals just like you and me. And they're not having any board meeting to discuss dropping their home prices. It's the homeowners that make the decision on the price of their property. It's the home builders that make that decision on the price of the property. And as long as buyers are paying what they're asking, they're going to keep adding a little bit to it and going up on the price. Look, ultimately it's only worth, a house is only worth what a buyer is willing to pay for the property. So the sellers, homeowners, can list their properties and ask for whatever they want for the property. But the quickest and best indication to know as a homeowner, is my property overpriced? Am I asking too much for that property? Is simply, if nobody is looking at it, if nobody's going to look at the property, that's the quickest and best way to know that apparently I'm priced out of the perspective of any educated buyer looking at purchasing my home. So why does it take so long for the housing market to shift? Why is that it takes so long for things to catch up and change and slow down and adjust in the real estate market? Allow me to explain. Homeowners price their property. They hire people like myself to go into their properties, tell them what it's worth. We do things a little bit different, meaning that we go in and actually show a consumer, homeowner, in real time what the property will sell for based on comparable properties, meaning that homes that have sold as closest to apples and apples as their home. It's at that point that they make the best educated decision to price their property. So here's what's going to happen. We're not going to see a real estate crash. It's going to take probably 12 to 18 months for the market to catch up. And here's the reason why. Homeowners are just now kind of starting sort of to realize, if you will, over the last 12 months to 6 to 12 months that, oh, I can ask that much from my property. I meet with homeowners literally on a daily basis, and they are absolutely shocked of what they could sell their property for.
He ain't lying.
Now, this is why I say it's going to continue, because these homeowners are going to be of the mindset of, well, if I can sell it for that, why not sell it now and strike while the iron's hot? So you're going to see more elevated prices to the market. Now, what you will see is elevated asking prices, not so much elevated sales prices, because at the end of the day, the home buyer is more educated now than ever before. We as consumers have access to all data, everything that has happened in a real estate transaction, past and present. And as a buyer, your decision, your education is far greater than it ever was. And to have that knowledge that home is overpriced. So as a home is listed for sale, it's oftentimes on the market and it doesn't sell for 30, 60, 90 days. That's kind of the tradition. Right now, it's like everybody's gobbling it up. It's like throwing chum in the water and the sharks just jump on it. But what happens is, as more and more homeowners place their homes on the market and they're piqued by the curiosity of how much more they can sell the property than they ever thought imaginable, they're going to put their homes on the market and they're going to realize, oh, I thought I could get that for my property, but I can't. So then they're going to reduce the price of their properties. And at that point, the property will sell. That's going to allow us to get properties back to a normal state, and it will also give us more inventory to choose from into the future. Look, every market is different. Every market is what I call hyper-local, meaning that you can be in a Metro New Orleans area or Miami, Chicago, Columbus, Nashville, wherever it may be. But you're going to have outside markets. You're going to have pockets of neighborhood. There's going to be subdivisions that are more desirable than others. It's been that way for years. But the question is, will we see a housing crash in the near future, in 6 months, in a year, in 18 months? The answer, no. We will not see a housing crash in 12 to 18 months. I promise you that. And look, here's a big reason why I seem so overconfident in that. 25 years in the business, take back 2008, 2009. When the housing crashed, you have to understand that so many people were behind the eight ball, so to speak. In other words, they bought homes in 03, 04, 05, 06, and they bought them with adjustable rate mortgages. They also bought these homes and were given loans of what they call subprime loans. So you had groups of lenders out there that were literally just subprime lenders, like, oh, we don't do FHA loans, we're just a subprime lender. Well, the subprime lender would loan mortgages, loan money for people to buy houses with very, very low credit, no income, no job, no cash, no asset. There was a term for it. They call them ninja loans. No income, no job, you get it, right? Today that has changed. Right at 60% of the homeowners have a fixed rate mortgage. You're talking millions of people have a fixed rate mortgage on their home at less than 4%. So it's so important to know that the last housing crash was fueled by people, consumers that thought that they were doing the right thing by purchasing a home, doing their American dream by purchasing the home, getting qualified to purchase a home, getting approved to purchase the home, when in fact, they really shouldn't have been approved to purchase the home. Now, as everything's going good, it's great, it's rainbows and butterflies, the economy's going great, the Federal Reserve says, well, we got to slow this pony down. We got to slow the train down. So as rates tend to rise, those adjustable rate mortgages also rose. And when those rates went up, mortgage payments went up, and people basically, truthfully, couldn't afford those payments anymore. Now, today's a little bit different. It's much harder to get, I wouldn't say harder, but you have to have a 620 or higher credit score. You have to have 2 years on the job. You got to have a little bit of reserves, and you got to show proof of income. And so your debt to income ratio, meaning you can't have too much debt. Even if you have a good credit score, you can't be swamped in debt. In other words, there's a certain percentage, and typically it's around 32% of your gross income or adjusted gross income if you're self-employed can go towards your mortgage, and not much more than that. And this is why it makes the housing market so much different than the financial sector. It's not a quick overnight thing. It takes homeowners placing their home on the market, hoping to get a certain price, and then it takes months. So when will prices go down? Well, prices will go down when there's a lot more inventory and there's fewer people buying, or the inventory rises to the people that are purchasing. To make a long story short, it's fueled by supply and demand. I say this a lot in my videos, but it's really just the basic economics. When there's a demand for something, it goes up in value. When there's not a demand, there's no value. And of course, prices going down, the federal government will be raising the rates in March as a tactic, if you will, to slow people from spending money. But look, a 4% interest rate, and they're talking about the rates going up. They're at 3.75 now, but a 4% interest rate is not going to stop people from buying houses. You've heard me say that in 1981, 2 million homes were purchased when the interest rate was 18.5%. People are still going to buy houses. The flip side of that, more homes are going to come on the market. Building permits are up, more builders are building houses, developers developing land, and we're going to see a lot of foreclosures go into the market. And the reason why foreclosures are going to come into the market is because as of July of 2021, the moratorium was raised on foreclosures, lifting that. So now banks can foreclose. So banks can foreclose on a property where someone has been delinquent in their payments. They can take the property back, and they do so, and they'll put the property on the market. And that will bring prices down somewhat. But here's what I'm finding banks do. It used to, banks would just dump the houses on the market. Now banks actually go in and do paint, sprucing up, clean up, replace carpet even, replace flooring, and they'll put the property on the market for market value. And of course, spring is just the time of year to sell property. It's the time of year to make purchases. The grass in the air, the sun shining, the time changes, the kids get out of school, and the spring and summer months are historically always the highest home selling months for consumers. As a result, more inventory means more opportunities for buyers. So keep in mind, as we roll into spring, you're going to see more homes hit the market. I'm seeing it already right here in the first 2 weeks in February, and we'll see more buyers. And it's kind of keeping up with each other, which is still causing appreciation at a faster rate than we normally see at around 3 to 4%. Now, I hear people shouting to the rooftops, home buyers declining, the numbers are declining, they're going down. Look, they go down every year. Historically, do your research, Google it. Every single year. It doesn't matter if you're in Duluth, Minnesota, San Francisco, Las Vegas. Less homes are purchased in January than any other month in the year. From May, June, July, it rolls. So look, there are over 1 million licensed real estate agents, and there's just 910,000 properties on the market. So literally there are more licensed real estate agents than there are active properties to be bought and sold in the United States. So will we see a housing crash, a real estate market crash? No. And here's the reason why. There's just not any homes on the market to crash. And there's not that many buyers buying houses to stop buying houses to make it crash. Now, ask me that question in 24 months, it may be totally different, but nobody can really tell in the future. This is just my opinion. But it's a simple, basic math of supply and demand. But please, don't take my word for it. I'm just a real estate broker, and I've sold many, many houses, and I've been in the business for a long time. But I just find that it's important for you to hear from the source of a person that still owns a real estate company, still brokers the sale of real estate, still list properties for sale, and I'm still in the trenches every single day, and it's what I do. So I'm not just consuming information and then puking it out to you like I see so many. This is actual information. This is data. This is where the rubber meets the road. I'm here every single day doing this business, and I just feel compelled to share with you what I see, what I know, and just knowledge, the facts of this is our economy. This is the housing market. This is what's happening with real estate around the country. And so listen, if you like this video, give us a thumbs up, like, comment, let us know what you think. Most importantly, subscribe to our channel. And if you don't mind, share this video. If you think this is educational, this is informative, this is entertaining to someone that you may know that can benefit from it, please do so. Until next time, we thank you for watching. We'll see you next video.